Thank you so much, Natalia. Thanks so much to the fantastic panel. We continue the Global Webit Impact Week agenda with a topic which is around global scaling, but particularly how to scale the social impact as part of the first day of Webit's Impact Week on AI architects. I would like to remind all moderators and all of you that our hashtag Webit is where the discussion takes place, and of course using our platform to ask questions and to share your thoughts. It's a free and open platform which is powered by the world leaders, the virtual show. I have the pleasure to welcome back again today John Byrne from New York Post, and to give the floor to him.
Well, hello again, everyone. And this is another exciting panel for Global Impact Week. And this one is how to scale the impact. That's really appropriate. And I just want to remind people watching and listening to use the social media facilities and tools as generously as you can. Use the hashtag Webit, WEBIT, and of course the popular TVS platform for all your networking opportunities and interactions during Global Impact Week. Now, we have a fantastic panel, and I'm going to begin by having each of them introduce themselves and maybe just briefly tell us about some of your greatest achievements or what you have been most proud of, and maybe some of your disappointments. And so let's start maybe with Alix. I see you on my left here, seems the logical way to go, and let's sort of work our way around circular.
Excellent. Thank you so very much. My name's Alix Zwane, and I am the CEO of the Global Innovation Fund, or GIF for short. We're an impact-first independent investment vehicle that's backed by bilateral aid agencies and is focused on working to improve the lives of the world's poorest people using debt, equity, and grants to back innovators with ideas that have the potential to solve the big challenges in development today. Personally, my passion for development and my journey as a social entrepreneur and investor began when I was 19. And I went to study abroad in a small country in Africa called Swaziland, which is today known as Eswatini, as part of the United World Colleges program. In Swaziland, I saw the inequality between my privileged life in the US and extreme poverty faced by many people in developing countries. And over time, that really has become my focus. And really what I say I've spent my career on is the question of what is effective development assistance and effective philanthropy? How do we know it when we see it? And how do we use that information to make the case and the coalition for smart, modern assistance, philanthropy, and impact investing? So today that's brought me to GIF, which I think sits at a really interesting nexus of development policy, impact investment, and the rigorous generation and application of evidence. And I look forward to talking with everyone today about how we can make the whole greater than the sum of the parts.
Fantastic. So clockwise, Chris.
Thanks so much, John. I'm Chris Ye, and I am one of the co-founders of Blitzscaling Ventures. We invest in the world's fastest growing startups. And the reason I'm here today is my book, Blitzscaling, which I wrote with my friend Reid Hoffman, came out in 2018. It's been enormously popular with entrepreneurs who have really focused on its message of growing massively valuable companies really quickly. But what we found is a lot of people missed our message about the importance of responsible growth. And people are using blitzscaling as an excuse to grow quickly and recklessly. And one of the reasons why I wanted to be here for Webit and Global Impact Week is to make sure the message gets across, A, that these tools should be used responsibly, and B, they can be used to have an impact. I've been involved in impact investing and social impact for well over a decade, and I'm so glad to be here today and just hoping to contribute as best I can to the discussion.
Fabulous. Amit.
Well, thank you so much. My name is Amit Bouri. I'm the CEO and co-founder of the Global Impact Investing Network, or the GIIN for short. We are a network that includes over 40,000 people around the world and over 400 formal members. So these are investment organizations, firms, huge global firms and small boutiques that are all focused on how to deploy capital in a way that achieves both financial objectives as well as social or environmental impact. We do this through engaging our global community and helping to scale best practice around impact investing, helping to educate investors on 6 continents about how they can use their money to drive social impact. And also we do a tremendous amount of work on measurement of how metrics and data and analytics can inform more effective impact investing. I'm incredibly excited to be here as part of this conversation because this is a time where we need to be working much harder than ever before on how we actually scale impact. That's very much what our network is all about, and I'm grateful for this conversation.
Great. Truls, you're in Norway. I love Norway.
That's great to hear, John. And hi, everyone. Great to be on this distinguished panel. Very, very short about my background. I think first of all, I think I should say I'm a serial entrepreneur. I started 13 companies in Norway, and well, most of them in Norway at least, and it's been 1,200 employees in total. You asked me about what are the things I'm proud of. That's one of them. I also sailed around the world when I was a bit younger than today. That was a feat, not because it was a long sail, but because we managed to hold the team together for 2 years, which was the real effort, I think, and we managed to do that. And coming back, having been in the Norwegian IT landscape most of the time, I've came to realize that I'm a huge believer in trying to refine the human potential, and the best way to do that is by being more innovative and open for all of those interesting things that happened. I can tell you right now, John, that when I started my first companies back in the 1990s, we didn't really think a lot about impact. But the last 4 or 5 years, I've also been writing 3 books about innovation. And in the last book that came out only 3 months ago, it's here. Impact investing is a major part. I don't think you can succeed in 2022 without having some impact as a part of it. So it's been a journey. It's a really, really great journey, and I love to discuss this with this distinguished team.
Great. There's a lot of writers and authors here today. That makes it even more special. So let's look at the venture space and entrepreneurship. And of course, startups are making a big impact in our world, and they're a big part of the Global Impact Week, as is the Founders Game Startup Competition. So just looking at startups, each of you can take an approach to this and respond. What's your advice to startups today? How do you measure them? What sort of metrics do you employ? How do you judge them? And how do you decide to invest and put capital into them? Is it a gut instinct, or are there some defined goals and metrics?
Sure, John. I'll start with that one.
Okay.
So the first thing I would say is that we have to distinguish between a startup and a small business. And I think that the thing that sets startups apart is that there's some sort of flywheel effect that allows them to get much, much bigger. Right? A small business like a dry cleaning store, there's no flywheel. You get to a certain stage, you serve a certain neighborhood, and that's pretty much it. But startups, a company like an Airbnb, for example, there's a flywheel effect where the bigger the company gets, the easier it is for it to grow. And that flywheel effect is what allows startups to grow, and ultimately those impact startups that have a flywheel effect to have such a huge impact. So I think that the key thing that we look for, at least when we're looking for startups, is evidence of that flywheel. We call it a winner take most market dynamic. And there we're really looking for things like network effects. So as the number of customers or users grows, does it become more and more valuable for each individual customer or user? Because if that's the case, then what's going to happen is you're going to have a increasingly valuable product and an increasingly valuable service. So when we are thinking about companies, we will judge them based on their network effects, based on that market dynamic, and also look at things like, do they have a distribution system that will allow them to grow faster than their competitors? And when we look at these things, in addition to the classic things that we look for in a business, profitability, the ability to grow and expand, and so on and so forth, that's how we make our decisions.
All right, who else wants to come in here? Truls?
Yeah, I'm happy to jump in, although it's hard to kind of jump in after Chris because he co-wrote the Bible on this. I don't honestly, I don't think it's a week without I'm talking to someone that has been reading Blitzscaling and they love it. But I have to say that when I'm not on this panel, I'm leading the Open Innovation Lab of Norway, where you have some of the large companies as well. And basically, my first question to any startup is how does your ecosystem look? And I'm telling actually the same thing to the large companies in Norway. I said that you need to include some of the startups and the scale-ups in your ecosystem, because that's when you will learn the new things. You don't learn the new things from your own employees so much. You have to be challenged by some of those startups and scale-ups, and so we kind of all need each other, and this ecosystem way of thinking is really, really helpful. And I think that some Norwegian companies have come quite a long way in doing that now. So they are helping and they're taking board positions, they're investing in some of those startups, and it benefits both the startups as well as the large companies. Win-win.
Alix?
Thank you for the opportunity to contribute on this one. From our perspective, our North Star is the fact that the most successful social innovators are those with a deep understanding of the social challenge they're trying to solve. I am still struck by the Village Capital report from a few years ago that found that 90% of fintech investment in East Africa is going to companies with American and European founders. Obviously, that has to change. We collectively need to engage not only with innovation hubs and incubators and accelerators, but government ministries, women's rights groups, and research hubs to find the innovations we want to back. If we limit ourselves to funding founders who are just like us, then we'll find ourselves funding innovation for its own sake. We will be violating Chris's rule, and will simply mean we're not sourcing the right deals and backing the right entrepreneurs. Relatedly, and this is my last point, I'd just say that an important part of understanding the local context is understanding the broader policy and regulatory environment. And that means working with, not around government. It's especially important, obviously, in public sector innovations or those whose route to scale is a B2G model or through public procurement. But market-based innovations also need to understand the environment in which they operate and foresee policy and regulatory frictions and build them into their business planning.
Amit, you want to come in here?
Yeah, please. No, this is a great discussion to kick off. And I think one thing I would just add to answer the part of your question about metrics, I think one of the important things when we're thinking about how to seed startups and how to drive great scale amongst new business models, of course, is to what end? And one of the things that we've seen huge advancements in rigor is how do you actually think about a measurable, demonstrable way of understanding your social or environmental impact? We've done a lot of work on this at the GIIN. We're a nonprofit organization. We've supported the development of a system called IRIS Plus. It's IRIS with a plus sign. And that is a common, it is a system for measuring, managing, and optimizing impact. So it allows investors who are trying to drive a specific goal, such as fintech to drive financial inclusion in emerging markets, or sustainable agriculture that's trying to drive an increase in food security, but also much more sustainable forms of agriculture and cultivation. How do you actually materialize that into operational metrics? And that's what IRIS Plus is designed to do. We think this is incredibly powerful, because it gives entrepreneurs and investors a common language by which they can understand their performance beyond just traditional financial performance, as important as that is, but to understand additional dimensions of impact performance, which we think is absolutely critical, and to kicking off that flywheel that Chris spoke to, but focusing it also on how to drive scale, not just from a financial perspective and a revenue perspective, but also from an impact perspective.
Great. Impact is obviously a key theme of this Global Impact Week, but I think there's some confusion among the wider population, maybe even investors, in terms of how you define sustainable investment and impact investment. Could somebody just kind of drill that down a little bit and give us a broad picture?
I'm happy to give to kick off on this one. I think these are both incredibly appealing terms. Everyone wants to be sustainable. Everyone wants to be high impact. And as these have brands in terms of gotten more cachet, it means that we see them in a lot of places, and it has become quite confusing. So I think investors, entrepreneurs, everyone can be a bit confused by this. But I think I can help explain kind of how we see this market evolving. It is important that our entire economies become more sustainable. It is essential from a climate perspective, from a perspective of social inequality and social stability, that we actually have sustainability embedded into the way that every company operates. The way it's often being driven right now is through an emphasis on risk mitigation. How do we think about issues around climate and others in terms of the financial materiality, the risk they pose to a business, which is incredibly important, and every investor should be doing that. Where we see impact adding a very specific dimension is if impact investors are specifically targeting a positive impact through their investment. So it's not just a consideration of sustainability factors, but is actually embedding impact into the business model. So our technical definition is that impact investments are investments that are made to achieve a positive, measurable social or environmental impact alongside a financial return. So it's not just how do we consider climate change, how do we reduce our impact on the climate, but actually how do we invest in solutions that help move the needle in addressing the climate crisis? Or how do we invest in solutions that help advance progress towards the United Nations Sustainable Development Goals? So these are complementary, but it is important from our perspective. We would love to see at the GIIN, impact becoming part of all investing, and we'd love to see every investor, embed impact investing into their portfolios. And I would love to hear from my fellow panelists on how they consider these issues as well.
Yeah, I mean, I guess that raises another question. Should there be some sort of standardized metrics when we're looking at this impact investing that we're talking about, so that it's very clear to all the players where they stand?
Yeah, I can briefly build on that. So we think this is essential, and that's why we've developed Iris Plus. When we were founded about 12 years ago, Iris was part of our founding strategy, in part because we knew that for impact to scale, we actually had to have a common language for how we had talked about the actual impact performance and the impact reporting. And that's where Iris came from. And its current incarnation, Iris Plus, is used by over 25,000 users around the world. They're spread on 6 continents. We have, I think over 70% of the world's largest asset managers and asset owners use Iris Plus in some form. And I should mention it is free to use. So you can log onto the website and access it, whether you are one of those entrepreneurs that Alix was speaking about, or one of those large companies that Truls was speaking about. It is widely available by design, so we can all speak the same language and focus our attention not on how we define impact, but how do we achieve it.
I think it's great to hear about the GIIN's leadership on this topic. In the early days of impact investing, you would often hear about money being placed with expectations of commercial financial returns. And then investors might say, well, this is an impact investment because I'm going to be investing in clean energy or private healthcare. And thus, that's all I need to know, that it is an impact investment. And I think what we're hearing now is a much bigger challenge to take that further and to measure impact. And I guess the one thing I would say is about why that's important that maybe hasn't been raised yet is that we don't get to, by definition, we need to actively measure impact and hold firms and funding vehicles accountable so that there's a clear justification for concessionality. And we don't get to avoid this question by saying, oh, we are charging commercial rates, so I actually don't need to call this a concessional investment. Certainly in contexts where local capital markets will not lend to a business, perhaps because credit is rationed countrywide, or because risk is perceived as too high at that rate for that innovation, we are effectively subsidizing, because in expected value or in expectation, we think our rate of return will be lower than what those local banks would be expecting. And I think that in certain classes, we should be comfortable with that. We need pools of capital that can accept that kind of risk, but only if we know the social value that we're generating in return.
Anybody else want to come in here?
Yeah, could I just add in there, John? I would say I think it's very true what has been said here. But having come at it from have been an entrepreneur and an investor, I would say that in Norway, at least, you didn't have to go many years back before you talked to impact entrepreneurs or social entrepreneurs, and in some kind of weird way, profit was a dirty word. You were not supposed to make money. You were not supposed to even be able to scale when you were in social entrepreneurship. So these two worlds have been kind of coming together. So I'm a huge fan of what's happening now. And I think that the United Nations with the 17 Sustainable Development Goals should get some credit for that. Although we actually know, if you go into it, it's the Millennium Goals that kind of put all of this in place. So the 17 goals came on the back of the Millennium Goals, which was probably, if you look at it, very successful. So I would say no, if you want to start a business in Norway and in the Nordic countries. You would not even get the best talents if you don't include the triple bottom line thinking: the planet, the people, and the profit. And I think that's a huge step forward. 15, 20 years ago, that was not the case. So this is going definitely in the right direction, in my view.
Well, I'm going to pick up on Norway, Truls, here, because Norway has some kind of a secret sauce, because it has been ranked the third globally among the top ranked countries for national sustainable intellectual capital and other sort of positive indicators. Why is that? What explains all that?
Well, you know, there's many ways to measure, as Amit said as well, and I'm not sure if Norway has done a better job at it than some of the other Nordic countries. If you're looking at the Global Innovation Index, for example, Norway is actually a bit behind. We're at the 20th place, whereas Sweden, for example, is number 2 or 3. But the good thing about the Norwegian system, I would say, is that we have this, I would just to kind of put it very blunt, I would say that we're not that many people. So we used to collaborate when we can, and then we compete when we must, which is a fantastic way to create innovations without all the lawyers involved and all the paperwork involved that in some other countries is part of the game, much more so than in Norway.
That's interesting. So a smaller population to begin with, but you've also diversified your economy since you became very wealthy, or relatively wealthy, with the oil reserves and discoveries. Because on my last visit to Norway, I was struck by the amount of young tech entrepreneurs and venture investing. It was pretty impressive.
It's taken some time. When I started my first company back in 1992, my friends thought I was kind of the sad story, because I obviously couldn't get a job since I had to start my own. So it's been a journey. But you're right. There's a lot of entrepreneurial thinking going on. It's a lot of innovation. And I would say that the national social security system probably has a large part of the of the positive blame on this. It's possible to start a company, and if it doesn't work out, you will still be taken care of. You don't find yourself on the street in Norway. So that's a good thing, not only for Norway, but for the Nordic countries. And I think that is helping people become more innovative. There's less of a risk involved in starting something. If you don't succeed, you'll go back and you'll find a job again. So you go in and you go out. And that kind of swing door effect is fantastic for innovation. I'm sure Chris and the others will agree on that.
Well, do you want to come in on that, Chris, or Alex, or Amit? Because I'm going to move on to the next question, if not.
I do think that it's a really good point that Truls makes, where there is the opportunity for governments to support innovation indirectly. Rather than saying as a government, we have to pick winners and decide which companies we're going to support, simply offering the ability to support people to take risks is so critical. And this is one of the things that's enabled people, not necessarily through government action as much, but in Silicon Valley to be so entrepreneurial, because there's this notion, if you start a company and fail, you're actually more appealing to potential employers. So the private sector essentially erected a safety net for entrepreneurs. Mm-hmm. And in Norway's case, it sounds like the public sector has done something similar, and that's helped spark innovation.
Great.
But I don't want, John, I don't want us to kind of be like the poster child of what's going on. Keep in mind that Norway, we have less than Birmingham size of population.
Yeah,
so,
well, it's all about scale in a demographic sense as well. Let's look at SDGs. How can the private sector support sustainable development goals, as that means, and invest in new and proven ways to fight poverty? Also, what is the role of innovation in overcoming development challenges and building resilience in communities worldwide? I'd sort of like to think outside the box as well when we're talking about venture investing and fighting poverty. It's certainly a worthy cause. We should pour money and capital into areas that are suffering economically, where have famines. It's just a pure humanitarian response. But as Elon Musk noted recently, you could pour a lot of money to certain places and it certainly won't eliminate the poverty. There's systemic political risks. There's bad organizations sometimes, and there's stuff going on in the background that is not very transparency is lacking in a lot of countries which have recurring economic nightmares. Notwithstanding that, can you respond to that, how the private sector could support SDGs and how we could deal with all of these issues in a very holistic way, shall we say?
Give an example from some of GIF's own work about how I think we can actually crowd in private capital for the kind of challenge that's exactly what you're describing here. A few years ago, we made an investment in a company called Babangona, which is a for-profit agricultural franchise model working with poor farmers in northern Nigeria. We were excited about Babangona's potential ability to improve the lives of those people in a particularly hard to reach and conflict affected region. But for Babangona to reach scale, they were going to need access to quite a large amount of working capital, as the way that they finance farmers' inputs is by making loans to the farmers who are in their networks as well. So you can see how this would touch on multiple SDGs, as well as some of these concerns you just noted about conflict. So with this in mind, we structured our investment as a local currency subordinated debt tranche. We structured it this way to take on a bit more risk, but in doing so, we're able to crowd in something like 10x of our own original investment from other Nigerian, European, and American investors, many of whom could only lend in dollars. With the exchange rate risk that we've taken on, even if things go very well, it's quite likely we'll lose a bit of money. But the potential for such a large impact on poor farmers, and the fact that we could accelerate Babangona's growth by getting them access to this other dollar-denominated debt, far outweighs, from our perspective, our below market rates of return. And so that is actually, I think that's an interesting example because you see how it contributes to the SDGs, but you see how you also have to think from a development policy perspective when thinking about whether to make this kind of investment, not just purely as a deal team member. And so I think that means that for all of us working in this SDG space, diversity and inclusion on our teams is a must-have. It's not a nice-to-have. We're impact investors, but we have a really complex optimization problem. We're not just maximizing profits. So we need teams of development experts with a deep understanding of the local context, creative deal makers, and yes, those lawyers to structure deals that drive for impact at scale. And then we also need the ability to share lessons we're learning with governments and development banks. In our experience, such teams are highly diverse by necessity.
That's very interesting. So I'm sure it's important to get all parties on board, including governmental agencies, to make sure your plan gets implemented and that you can measure results positively.
Well, that can sometimes be the case that, you want to encourage a regulatory framework that rewards achieving outcomes rather than that specifies particular technological activities or solutions. Because if the regulatory framework says, here's the outcome we want to see, then there's lots of space for innovation about, okay, well, how could I achieve that? If the regulatory framework says you must do X to achieve this outcome, then the space for innovation narrows a lot. So oftentimes what we really hope, if we're all doing our job well, is it's not necessarily some innovator or entrepreneur who lobbies for that or advocates for that with government, but people in the larger development ecosystem who might be encouraging that kind of innovation-friendly regulatory environment that then allows entrepreneurs to have a bit of an easier road to hoe.
Yeah, I would imagine that there are certain countries and communities just off limits because it's impossible to do business in some local economies which have, let's say, systemic political risk. Does somebody want to...
Yeah, maybe others. I mean, I'm sure, Amit, you have lots of thoughts on that.
Sure. Yeah, I do think that it's important when we kind of zoom out and think about when achieving the Sustainable Development Goals that we recognize that there's an incredible role to be played by all sectors of society. It's an opportunity for government leadership, for civil society and NGOs, and for the private sector. I think depending on the market you're in, the mix of those varies. And so there are some markets that are very hard to invest in for any variety of reasons. Could be due to fragility of the economies or the governments. And those require other tools to help support kind of addressing the Sustainable Development Goals in their context. What I think is absolutely important, though, is that it is to recognize the fact that the SDGs cannot be achieved without a significant shift in the way that the world invests. What I think was a pleasant surprise after their launch in 2015 is that there was a great deal of support from the private sector. You saw like huge multinational corporations all around the world, as well as investors starting to think about how they can reorient their work to help address the Sustainable Development Goals. The first phase of this was just around kind of framing. It was around how do they kind of like use that framework to understand their current activities. The phase that we're in now is how do you actually close the gap? How do you actually drive your business activities, your innovation capabilities, and your investment capital to help to close the gap on some of these goals that are hugely important issues like advancing gender equity or affordable and clean energy for all people around the world. We see that COVID certainly has unfortunately exacerbated many of the issues that are highlighted by the SDGs. And so it just raises the stakes for all investors to be addressing these issues. We actually did, when we launched Iris Plus a couple of years ago, it was a relaunch of what the system we had before. And specifically, one of the goals was to reorient the way the metrics are organized around the Sustainable Development Goals. So if an investor says we're focused on SDG 7, they can identify the investment strategies and the metrics that they can use to help measure their progress towards those global goals. And that addressed a huge gap because the goals are global. They're set for a national context. So there could be a goal for Norway or for Nigeria, as the case may be. And then investors looking at, I'm putting capital into specific projects and companies. How do I make sense of that? And so Iris Plus is designed to help bridge that gap so you can understand operational metrics that add up to global progress.
Great. Anybody else here? Truls?
Yeah, I just want to build on what Amit is saying here, which is completely true. But this is also where we have to start realizing that we have come very short on this. We still, most companies, most even startups or scale-ups or large corporations have come very short distance from where they started to where they are going. So most organizations have a huge potential in becoming a lot better at innovation, and it is a capability. It's something that you can train and become better at, but you obviously have to measure it. It's fundamental, and I totally agree with what Alix was saying as well about the need for diversification. The problem to me seems to most organizations, we like to talk about diversification, but at the end of when you have someone in the group that means or is talking about something very different than the others, we kind of tend to freeze them out. We don't really want to have them included in the group. There's a lot of group thinking going on. So in reality, most leaders need to become better at getting these the internal guerrilla teams, so to speak, get them, give them the microphone, give them the possibility to come up with this, the totally opposite viewpoint. I think that would have been helpful for innovation, both at the company level, but also at the country level.
Chris, do you want to come in here?
No, I think that the other panelists have spoken very eloquently on this topic.
Okay, well let's move on to, it's in the news, obviously. It's a hot button item, and we know where a lot of the investment community is on climate change, climate resiliency and adaptation, and there's different papers and views on that. But do any of you have strategies for unlocking investments for climate resilience and adaptation? Is that something that's in your orbit? Who wants to come in here?
I'll just mention a bit about at GIF, what our thinking on this has been, just very briefly. In consultation with other investors and thinkers in this sector, I think to your point, we've quickly learned that adaptation and resilience are neglected in the global finance landscape. It's something like $500 billion a year goes to mitigation, while something like $30 billion a year goes to adaptation, with a fraction of that for developing countries. And I think, we see that then as really part of our mission, because resilience and adaptation are integral aspects of poverty reduction. In some ways, these things are two sides of the same coin, that development is resilience. And many poor people are not resilient even to today's climate. So at COP26 at Glasgow this month, I was really delighted to launch GIF's new Innovating for Climate Resilience Fund, which is seed funded by the UK's Foreign Commonwealth and Development Office. And we will be looking specifically to invest for adaptation and resilience, and are looking for mission-aligned partners to work with us to find and fund that class of innovation. And I'm sure that there are many GIIN members who, it'd be great to see what the GIIN will do in terms of convening their members around this topic. And certainly in Silicon Valley, there'll be many great ideas coming out, I'm sure, as well.
Yeah, the Glasgow summit was got a lot of world attention, and it sort of raises the other point that aren't a lot of the global economies working at different speeds. The West is working at a different economic speed than countries in sub-Sahara Africa, who have raised the issue that, the goals for reductions in fossil fuels are not compatible with their long-term development. Do we need to view that with a different prism?
I can speak to a couple of take on both of these questions at once, if I can at least make an attempt. I think these are huge issues. The thing I want to build on Truls' point around the Sustainable Development Goals about we're nowhere near where we need to be, and I think the same is true when it comes to climate change, whether it's mitigation, adaptation, or resilience. The amount of capital flowing, despite all the positive momentum and energy around this, is nowhere near the scale that we need. And so it is time for every investor with a great deal of urgency to be thinking about how they can allocate more capital to climate solutions that help drive mitigation, to those that help communities adapt, and also that help drive greater resilience. When it comes to this question around these topics around climate justice and what's fair, particularly for frontline communities, whether they be in sub-Saharan Africa or lower income communities in other parts of the world, who have not benefited from the development that has driven a lot of the emissions that are putting in this position, and are at the same time are most vulnerable to some of the impacts. Whether it's impacts around kind of like food and water access, around climate migration issues and others, it is incredibly important for the world to recognize that helping to address these inequities is absolutely critical to achieving the Sustainable Development Goals, and I think also to achieving true kind of mitigation of the climate crisis. Because we cannot address the climate crisis without addressing human need. And those two things go hand in hand in a very fundamental way.
Anyone else here?
I think the classic thing that we have to deal with with climate change is the sense of urgency. I think that if we were to sit back and wait for it to get to the point where all the effects were apparent, then it might very well be too late. And that's one of the areas where, especially I think the limited partners that provide capital to the investors can play a role. I think that limited partners have always had the ability to tell investors, listen, we want you to divest from certain regimes, or we want you to begin funding solutions for climate change. So I think that the best way to do this is for people whose pension funds are limited partners, or people whose governments are actually contributing, to make their voices heard, make sure that they are speaking up and saying, this matters to me, because capitalism in some ways is the ultimate democracy. It's not one person, one vote, but it is kind of $1 or one unit of currency, one vote. And people have more power than they think.
Okay. What is the role of measurement and strategy for improving results when we're talking about open innovation? The idea that you source your ideas externally rather than from within your organization. Any thoughts about that?
Well, I have a lot of thoughts about this area, John, and I would say that the measurements have come a long way, but they still have a long way to go. We tend to measure things, at least in the larger corporations, we tend to measure them based on the old financial things, which is kind of crazy. And we need to be better at this. I can tell you that because I'm also I'm the chair of the Norwegian ISO group for innovation management, and there's a lot of interesting things going on now. And we have provided to our 50 members in Norway, the 50 corporations that are members of Open Innovation Lab, we provided them with a list of 36 different ways that you can measure innovation. And none of them is based on profit per se. So it's a lot of interesting things going on, but this has taken way too long, and it's too many great projects that has been killed because of the wrong measurements, and it's too many stupid projects that has been going on for years based on the same thing.
Okay, well, maybe we'll just we're coming to the conclusion, and I want you all to look into your crystal balls and give us your vision for the coming decades in general, and what are the predictions for the development of the VC ecosystem? What's ahead for us, and what's the future hold? Maybe we'll start with Alix.
Oh, well, thank you very much. And first of all, thank you to all of my fellow panelists for such a rich and engaging discussion. I'll just close by saying that I think that the path moving forward for investors in impact is that it's clear that not only is innovation important, it's perhaps more important than it has ever been before. The COVID-19 pandemic wiped out decades of progress in lifting people out of poverty. And the climate crisis has the potential to deepen this damage. We cannot take decades more to regain this ground. So we have to have new solutions. And while investing in innovation is inherently uncertain, the upside is significant. And sharing the proof points of what works and what doesn't is vital for making the policy case to continue to invest in new solutions. We've done a little bit of work at GIF trying to estimate the social value of the work that we've done. And we think we've already exceeded it by investing in innovation on the sort of typical foreign aid hurdle rate of a rate of return of 10%, and are on track for a social rate of return over the next 5 years of something closer to 34%. So innovation pays. I know that we often think about the downside risk is so salient, but the upside is really meaningful. And because of COVID, we're going to have to try and learn how to do new things. So my crystal ball and encouragement for all of us is that focus on innovation and backing local entrepreneurs in terms that work for them. If that means being patient and flexible, let's find the pools of capital or structure the blended instruments that allow us to meet those people where they are with the kind of capital that they need. Thanks.
So I think that the trend that we see is towards greater democratization and greater diversity in investing. Once upon a time, venture capital was a very tiny thing concentrated in Silicon Valley with a small number of firms. Now we have thousands of venture firms all around the world. There's crowdfunding, there's decentralized finance. So I think we're going to see a continued evolution, and people need to let go of the systems of the past, believing that things are always going to be the way they were. And I think that the people who are forward-looking and adopt these new ways of thinking are going to be more effective.
Amit?
Yeah, I think we will see impact become part of all investing. Out of this recognition that if we're going to have a sustainable relationship with the planet and a sustainable society, that impact needs to be embedded. From the kind of early stage innovation that my colleagues are so great at sourcing, all the way through to those models that Blitzscale, as Chris is, his thought leadership is demonstrating. But that impact is embedded in the way that entrepreneurs understand, how they drive innovation and how they drive scale. And it's the way that investors allocate capital and see their sense of success. And that it's not just financial performance, but it's also the integration of impact performance as well. Thank you.
Truls?
Well, John, I admitted even in the beginning that I was a future optimist, but I'd like to end by, I think it was the Canadian environmentalist Paul Hawken that said it in a fantastic way, and he said it some 15 years ago. He said that if you're looking at all the data about what's going on in the world without becoming pessimistic, then you don't understand the data. But if you meet all the people working and being innovative in order to try to solve this without becoming optimistic, then you don't have a pulse. I think that's a great way to say it. It's a lot of fantastic, good innovations going on from change makers all around the world. That's why this conference is so important. So with that, good luck to everyone.
Well, thank you all for this fantastic and engaging and most informed panel during Global Impact Week, and good luck.